going on, y'all? I just want to. It's probably gonna be one of my last videos just about stocks in general. I definitely want to get back to talking about crypto and just other financial stuff. So I'm definitely probably gonna be one of my last videos for now, at least, talking about stocks. But yeah, man, I really just want to talk about Fomo and Yolo investing. And everybody knows Yolo. You only live once. And Fomo, for those that don't know, is called fear of missing out. So fear of missing out just means that you see a stock and either you believe that you should have been invested in it, or you see it pumping now and you don't want to miss out on it. So in both scenarios, you either jump in at whatever price it is right then. You may not look at it if it's up from a previous position or down from previous position. You might just get in then, and then a lot of times these people, what they do is they buy high, or they buy when it's like everybody's, when it's pumping, when everybody's talking about it. Then they end up selling it for a little bit lower than they bought it at. It starts pumping again. They buy again at another high, and then there they go. They sell it again for a loss. So two times they sold it for a loss. And we see that a lot of times, and that's how the 90%, when they say 90% of people lose money, that's how these people are losing money. That's how, you out there, some of y'all have lost money. I've lost money like that. And that's how, a lot of people, new investors, how they lose money. So, FOMO and YOLO investing is basically just saying, and that's FOMO. YOLO investing is basically just saying, you only live once. I don't really care about the stocks. I don't really care about researching it, looking into it. I'm just going to throw my money in it. I have it to lose if I can lose it. And, that's all it is. If I lose it, I lose it. If I don't, I don't, And we don't go in life thinking like that, Like, you don't go to the grocery store and just be like, I'm just go to the grocery store and just put all this stuff in my cart. If I can pay for it, I can pay for it. If I can't, then I can't. We don't do that in life with anything else. But with investing, we take it and we do a whole different thing. And that's what I was talking about with the gas price thing, and buying high instead of buying low. Like, we do things that we wouldn't do normally, that doesn't make sense logically, and that we wouldn't apply to other areas of our life, but we apply it to our investing. And that's just not smart investing. Now, this is, like I said, I always say this is just educational, but there's a difference between investing and trading. If you're investing, you're looking for the long term. So you're looking at, like, how can this investment make me money over time? Give me a return on my investment, ROI, over time. And if you're a trader, then traders aren't really looking at, what the low is. Or I'm not saying that none of them do, but it really doesn't matter. Like, you don't have to buy low when you're trading. You know what I'm saying? You just need to buy if you think it's going up further than what it is right now. Then you just need to buy in whenever you're trying to buy in, get your target, hit your gains, and execute your trades. So trading is for short term. Trading is not investing. Investing is not trading. Trading is something totally different. It's definitely for more experienced investors, but you're able to, you do whatever you want with your money. But I just personally know that a lot of people lose money because they don't know what they're investing. They don't understand what they're investing. They don't understand how to invest or what investing even is. And when you're looking at investing, just take whatever it is you're buying, whether you're buying crypto, whether you're buying real estate, whether you're buying stocks, whatever you're buying, and actually go and look into it. Research whatever the method is, the strategy, the stock, the company, the crypto. Research it. Research what it does, what it's intending to do in the future, and look at some historical trends. Look at how it trends up. Like, if you see that Facebook or Twitter or whatever, on average for the year, has only moved the most like $10 the whole year. If something moves only $10 the whole year, betting that it's gonna go up by $100 by the end of the week, or by $80 by the end of the week, is not an educated guess. Like, if it's pumping and you see it's doing crazy than its normal intervals. Its normal intervals is always up to 10. Then it goes, it's jumping $20, every couple hours. Then okay, then that's different. Because you don't expect Ford or Facebook to trade like Tesla. You don't expect Tesla to trade like Bitcoin. Like, you don't expect these other commodities to trade like other commodities, because they just don't. you know? And we have to look at that. Like, what are you investing for? Why are you investing? I'm personally investing because I'm looking at, I want long term gains. I want stuff that I can buy into now at low price points, hold for 3 to 5 years. That's my time horizon. And then I'm expecting, to sell these for much higher than what I bought them at. And I'm looking at these different things that I can invest in the early stages and that are actually good companies. Now, again, XRP, Doge, GameStop, AMC, can these things pump? Yes. They can pump for the next 6 months, the next year with these stimuluses. They may be able to pump for the next 2 years. But is it a long, because most people aren't going to, like a lot of people who are trading right now, a lot of people aren't going to be traders in 3 years, in 5 years. That's just how it is. Like, a lot of people are going to get into their career. They're going to get into whatever job they have. And, they're going to be focusing on that, doing 40, 60, 80 hours a week in their career, on their business, doing whatever they're doing. And a lot of people aren't going to be trading in 3 to 5 years. It's real popular right now. Investing is super popular right now. I'm not saying that nobody is, and some people are still going to be investing. But traders, a lot of people aren't going to be trading in the next 3 to 5 years that are trading now, because they're just doing it just for pumps, just for gains. But a lot of people aren't going to sustain it because a lot of people don't go back and check it. A lot of people will buy stuff, leave it there for a couple of days, maybe even a couple of weeks or a week, and then go back and check it. If you're doing that, you need to be looking at stuff that you can buy and hold long term, because trades happen in minutes, in hours, in days. Like, if you're buying something and then you're just going back 4 or 5 days later after you see something on the news, like, oh, I got that, let me go check. Like, you need to be looking at stuff that you don't have to constantly check if that's your strategy on investment. If you just want to buy something and just hold it and just don't feel like monitoring it or managing it, you need to be looking at long-term investments you can invest for 3 to 5 or more years. This is really why I say, crypto. Like, Dogecoin, and I keep talking about this, but it's really important, is that Dogecoin doesn't have any utility. Can it pump? Yes. Could it go to $1? Yes. Could it go to zero? Yes. So there's multiple ways that Dogecoin could go, but when you look at the underlying, it was created as a meme. It was created as a joke. It's created because they saw I think it's like Brian Marks or Brian, whatever his name is. He saw, all the different cryptocurrencies that were coming out at the time. And he, wanted to make a joke about all of those and just put up a coin. And then now it's pumping. You see Elon Musk, tweeting about it and talking about it, and everybody's jumping on it. When you look at these people, like, look at PayPal. And I encourage y'all to always definitely go check the pictures that I post. I'm going to be posting some pictures about what I'm talking about. But look at PayPal. PayPal started off talking about don't invest in Bitcoin. Bitcoin is a scam. Bitcoin is this. Bitcoin is that. And then here we are years later. And then now they're pumping Bitcoin. They're investing in Bitcoin. But they told you not to, so that way they could invest. Same Mark Cuban. Mark Cuban talked a whole bunch of junk about Bitcoin and ETH and all this other stuff. And then now come to find out, he talked about, I've secretly been holding, Bitcoin and ETH in my wallet. He released his wallet the other day. So it's like, a lot of people are going to tell you to invest or to not invest in certain things, especially institutional or large corporations or, big players. They're going to tell you, not to invest in something if they want to invest in it. And then they're going to tell you to invest in something if they're holding it. And then, they wanted to pump, and then they're going to dump it. So, when you're looking at some of these things, because corporations are out here to make money. Like, all corporations are out here to make money. So they're looking at what's going to make them the most money. They're not necessarily now always looking at, what's the best investment. They're looking at, how can I 10x? How can I 20x my money, 100x my money, me and my investors? And that's what they're looking at. So they're traders. A lot of large institutional, a lot of them are doing a lot of trades. Of course, they're investing in a lot of different things. But when you look at some of their positions and what they tweet out, a lot of them are doing a lot of trades. Like, a lot of them are trading. So when they're pumping Doge, when they're pumping AMC, when they're pumping GameStop, GameStop is going out of business. Nokia has not produced anything worth value in years. You might not know, but Dogecoin, it's a peer-to-peer currency. That's what that's what somebody was telling me. It's a peer-to-peer. All cryptocurrencies are designed to be peer-to-peer. At least any good one is designed to be peer-to-peer. The whole point is what all cryptocurrencies have something that they're trying to solve. Like I've said multiple times, what is Doge trying to solve? What is it trying to solve? And who is using that technology to solve that problem? Nobody. It doesn't have anything that it's trying to solve. It doesn't have anybody utilizing the technology besides the users, the people who are trading it. So, I mean, it doesn't have any real world utility or any economic value, and it's not something that's going to be around 5 to 10 years from now. And a lot of you people who are holding it aren't going to be checking it 5 to 10 years from now. So, one thing I always say, you can never go wrong taking gains. So if you're in the green on a lot of these things, a lot of you people, especially if you don't know why you're in the green, or you don't even know what the green is, you just know that you're up. If you're up, if you're in the green, if you're in the money, it never hurts to take profits. I'm not saying sell all your stuff, do what you want with your money, but it never hurts. If you're up, it never hurts to take profits. It never hurts to take profits. You'd be smart taking profits now while you're up, and not all, but you'd be smart selling something and taking profits while you're up, as opposed to holding it and letting it go down. But I suggest you do what you want to do if you want to hold it to the moon. But just know that a lot of people out here are YOLO and Fomo investors. If you're a trader and you've been trading and you've been investing and you know what you're doing, then I'm not talking to you. I'm talking to the people who, this is their first year investing, their first time investing. They don't know what they're doing. They're just out. They saw Doge in the news, buy it. I saw XRP in the news, buy it. GameStop, buy it. And that's perfectly fine. But just know that if you don't know who the sucker is, then a lot of times it's you. If you don't know who's holding the bag or who's going to be caught holding the bag, a lot of times it will end up being you. But, watch your investments, pay attention, do your due diligence, and, as always, just, make sure that you're asking questions and researching things that you're investing in. Because, while everybody's looking at all these things right now, look at the Graph token, look at Aave, look at Chainlink, look at ETH, look at projects that can pump in the future once they get that traction. But not only will they pump and possibly dump, but they'll actually be because it doesn't matter, anything can pump and dump, whether it's good or bad. These things can pump, these things can dump. But the whole point is it going to be around 5 to 10 years from now? Is it actually doing what it said it was going to do? Is it actually accomplishing the goals and the tasks that it said that it set out for? Is it doing that? Or ask, is your company doing it? Is the company that you're investing in doing what it said it was going to do? Or is it just pumping? I'm not saying, hey, I've traded before. So I feel like you got to get that out your system. I feel like most people, it's like a kid. You're going to have to learn, somebody tell you that it's hot, or somebody tell you don't do this. Your parent tell you don't do this, don't do that. You're going to do it just because they told you not to. So me telling you not, me warning you or me advising you, on, how to look up these different things, how to what to watch out for. A lot of people aren't going to listen. A lot of people aren't going to listen. I got, friends that I talk to every day who don't listen, but it's because sometimes you have to get burned. Sometimes you have to lose money. Sometimes you have to get scammed to be a better investor, be a better trader. I don't wish that on anybody. I hope nobody loses money, gets scammed, misses out on gains. Hope nobody does that. But sometimes it's what you're going to have to do. That's how I had to learn. That's how, I feel like the best investors had to learn. You had to get burned. You had to lose some money. You had to get scammed. And then you became better. You said that I'm never going to let that happen again, or I'm never going to make that mistake again. And, a lot of you are going to have to just go through that trial, and that tribulation to understand that and to become a better investor if that's what you want to do for the long term. Some people, and that's how you get those people. That's how you get, people in the older generation, even people in our generation who, you run into them and they be like, oh, that's that investing stuff, that's that stock stuff, that's that real estate stuff. I know somebody who did that, I did that, I tried that. And they have negative things to say about it because a lot of those people are just started out just like how you did. They didn't look into it. They didn't research. They didn't know what they were investing in. They got burned, and now they have an eternal hatred for it. And that's why I really want y'all to educate yourselves, just because I don't want y'all to get burned, or y'all to miss out, or y'all to lose money, and then it's like, oh, the stock market's a scam, or this is that is a scam, trading and investing, or this is a scam, or it's not for me, or whatever. Because it's, you know people lose. The average millionaire goes broke 5 times in their lifetime. Google it, look it up, whatever. But the average millionaire goes broke 5 times in their lifetime. The average one. Not all of them, but the average one. So if the average millionaire goes broke investing, or just goes broke, period, what do you think, is going to happen for you? And I'm not saying that you're going to go broke, but don't think that you're going to get in your first trade, your first couple trades, and always make money. Some people do. I'm not saying that it's impossible. There's some people who been investing in the stock market for a year, 2 years, 6 months, 8 years, 10 years, 20 years, whatever, and some people just never lost money. They were lucky, or really good. Some people never lost money, but that is like the super minority. Most people are going to lose money, and not lose all their money, but they're going to lose money. And do you have that money to lose? Some people are investing, their stimulus check in the stock market, or investing this and that in the stock market. And I'm not knocking it, because, for me, I take a lot of risky investments, but I'm okay with, if I know that, okay, if this thing goes to, zero, if it just went to zero in a matter of an hour, and I really didn't have any control, and I wasn't really able to get out in time, then that'd be okay, because it wasn't money that, I was dependent on. A lot of people are dependent on, this stock to go up, or this coin to go up, or this investment to, make a return. They're depending on that. It has to happen. Otherwise, some of them don't know what they're going to do. So, I advise you just to be smarter with your investments. Look and research what you're investing in, and don't go off of FOMO. Don't go off of fear of missing out. Don't go off of the hype. Invest in projects that you actually believe are gonna, return you money, are actually gonna be here in the future. And if not, for me, I say wait, don't invest. Because there's always gonna be another Dogecoin. There's always gonna be another GameStop, another AMC, another pump and dump. There's always gonna be, another XRP. There's always gonna be a new company and something that popped up. There's always gonna be something new. But I definitely want y'all to just, take your time, ask questions, do your due diligence, and just know that if you don't know who's holding the bag, if you don't know who the sucker is, a lot of times it's you. So take that. I'm gonna be dropping another video tomorrow, and y'all have a good day, man.